Good afternoon, traders. Welcome to FreeFX, your free source of Forex education and learning. Just as a disclaimer, anything in the video is not actual trading advice. And today we're going to discuss something that is of particular interest to me, and that is the way in which the correlation works when trading cross pairs. For example, today we're going to talk about the pound kiwi in particular. So it is Tuesday the 4th of August 2015, and we are in the afternoon, British summer time. And today has been a fairly quiet day from the majors point of view and for markets generally. I've been keeping an eye on the FTSE 100, for example, which has barely moved throughout the day, both the London Open and morning, and the overlap with the New York Open. Now, I'm going to discuss the particular way in which the cross pairs have correlations with the two or synthetic pairs, sometimes called, have a correlation with their respective majors. So in this case, we have a synthetic pair, which is the pound USD and the Kiwi USD joined up together. So I have a chart here which really talks about a number of things. First of all, you see it's a monthly, so the breadth of price here is quite unique. But we are keeping it to this magnitude because we need to see how over time price actually varies in terms of correlation with the two respective pairs from which this is created. So I'm going to actually create an overlay, and by doing an overlay of the different majors, you can see that you will have the opportunity to visually synthesize the influence that one pair has over a cross, or sometimes the other. So let's start with the pound USD, which is the cable. So we have it here in this line format, which we can change if we want to make it a bit more visible. So let's make it a little bit more visible. So we see straight away, so on the right hand side is your pound New Zealand dollar price, and here is our overlaid pair price. We see how much the two pairs correlate. So let's go back to the times before the financial crisis, and we see that whilst the pound USD was appreciating, what was happening to the pound Kiwi was exactly the reverse, so it was depreciating. Okay. Coming to this point here in 2003, we see that they start moving in tandem, okay, and then they go in opposite directions again. So we have a mirror version more or less throughout this decade. Again, here, opposite directions. And then we go past, so from 2000, 2001 to 2010. Now we see we're in inverse correlation here, but the movement gets a little bit less defined in terms of the inverse correlation. And we see these passages, 2013, and now we have a rising pound Kiwi, a rising cable or pound USD from about 2013 through to 2014. And now we have a rising, again, pound Kiwi and also a pound USD to some degree. Okay, the magnitude may not be the same. The scale at which and the momentum may differ, but we have a less defined inverse correlation. However, you can still appreciate that they are more or less inversely correlated in parts, which may be counterintuitive, as most of us may think that the fact that the first half of the pair pound New Zealand dollar should take its lead from pound USD, but that may not be necessarily the case. So let's keep this in mind and see what happens if we removed this price and overlaid the pound Kiwi with the other of the two majors, which makes up its price. So let's see if we had a different analysis by looking at the Kiwi USD, which we see in blue. Now, there's the inverse correlation there, an inverse correlation again, an inverse correlation, and so on. Now you can see much more clearly this inverse correlation going on, and I'll just highlight one area which you may appreciate a little bit more. Okay, see this area now from about 2008, the Great Financial Crisis, to present day. You can see how we have straight rise here in the Kiwi USD, straight fall in the, I say straight, but I mean it's pretty counter correlation here, so a negative correlation. Okay, so as one rises, the other falls. We can see also how the Kiwi falling here from about April of 2015 has really boosted the chances of the pound Kiwi. And we can see also that the pound USD, we were looking at that before, has been appreciating, but not to the magnitude that the pound Kiwi has. And that's because what really pushes the pound Kiwi at this point in time, at least in the time from April of this year to present, so that's 4 months, is the fall of the Kiwi USD. So this really is what has been giving the cue to the rise of this pair, which has gone through an inverse head and shoulders pattern and broken through this neckline around 2.4, 2.5. Okay, so we've risen this incredible amount, and we're talking thousands of pips here. Remember, this is a monthly chart, so it actually amounts to a lot just going through one segment here. So we appreciate that sometimes the way in which we look at pairs that are synthetic is really changeable, and we may or may not appreciate this, but it does actually happen that we have some obviously discretion in the way in which we look at the particular charts that we are using when it comes to the currency correlations. Now I'm going to go to Oanda, and this really gives me a lot of information about this particular area. So what I want to look at today is the way in which they show the currency correlation between the various currency pairs, and if I could sort of have a look at this every time I wanted to trade a particular cross or synthetic pair, that would be a very useful and time-saving way to go about it. Now, the Oanda website, which I'm not endorsing particularly for any trading purpose, I am just really using it for myself. And obviously you can see that there are a lot of things that you can do with this. There's a heat map, a table with the numbers 0 to 1, and then the bubble, if you like. Now the bubble obviously gives you here the legend, which is -1 and +1. Okay, so you have the correlations calculated with negative to positive correlations. So we'll be looking at the pound Kiwi. Now the pound Kiwi is not listed, okay, but if we added the exotics, I think that might actually take us to the pound Kiwi. So let's do a little search for that, and that should give us the actual prioritization of that. So if we clicked on that, that will take you to the top. Now everything is relating to the pound Kiwi. So we were looking at the way in which the pound Kiwi was negatively correlated or inversely correlated to the Kiwi dollar, and see if we can find that pair. So there's the Kiwi dollar. So you can see the negative correlation, okay, and that's the daily chart, okay. So it's very strong, almost 1, so almost perfectly negative correlation. And weekly as well, very strong, monthly, all the way to yearly, okay. If we went to the pound USD, as I was showing you on the charts earlier, you see that it's a very, very much weakened positive correlation, okay. All the way to the monthly, which is slightly stronger. 6 months is a little bit stronger, but nothing compared to the correlation with the Kiwi USD. So the fact that all the way to a year, the strongest correlation given to the synthetic pair pound Kiwi is the Kiwi USD should make us pay attention to Kiwi news at the moment more than pound news. Obviously, if we had the basic reasoning that fundamentally it is the pound which is the hawkishly leaning currency at the moment, rather than the Kiwi, which is dovish from falling down from its sort of most hawkish currency in 2014 to the certainly very weakening currency in 2015. Apart from the fundamental diversity in monetary policy leanings, certainly the pound is not pushing its own weight up, if you look at the cable, as I was showing you. So it is really a Kiwi weakening move that's pushing the pound Kiwi to such extremes upwards. So bear that in mind. But also, if we had events like tonight's data, which will be all about the employment and unemployment for New Zealand, an event of that kind, obviously, which came out with a negative print as currently expected, that would obviously again boost the pound Kiwi. But if we did have a rate rise by the end of the year from the Bank of England, that would be tremendous. Okay, so the difference between a hawkish Bank of England actually producing factual proof that they are intending to raise rates and do so, so put put facts to their words, against the Royal Bank of New Zealand, which keeps wanting a depreciation of the Kiwi dollar and has cut rates again at the last meeting. This is where we'd see a positive correlation between pound and pound Kiwi. Okay, there are obviously other currency pairs which follow similar dilemmas as to which pair we may actually want to correlate them to. So, for example, the euro pound, which I've been following myself for a while, the euro pound has, if we check against the euro USD, it has a strong positive correlation to the euro USD all the way to the yearly. Okay, so daily, weekly, very strong. And if we look at the pound, for example, the pound USD, the correlation with euro pound is a little bit less straightforward. So in this case, the pound is less influential on the euro than the euro pound than the euro USD. But of course, again, another sort of more QE or further events in Greece that could disrupt the sort of stabilization of the euro USD rate. All of these things, compared to the more hawkish leaning pound USD, would certainly contribute. And if the pound did go up with an interest rise, then that would certainly enhance the correlation with the pound USD. I hope this has been a useful topic for listeners, and I will produce the next video in the next few days. Thank you very much for listening, as ever, and leave your comments and likes. Thank you. Goodbye and good trading.